The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. We got about 24 minutes till the start of trading. We have initial jobless claims out this morning. We have some bank earnings continuing the trend. We jump into the markets, and you got the S&P down about 16 points right now coming into the opening bell, trading at 43.51. Interesting action when you look. We're chopping around right where we were early overnight on yesterday's action, Wednesday as well. We trade up to an all-time high print on the S&P, 43.8450, and we've backed off right to that same area that we were coming into the early hours of Wednesday action. NASDAQ 100 just getting back into the green. We're at 14,894. You were as high yesterday, 14,996 futures, missing 15K by about 4 points over there. You get the Dow pulling back off about a 0.5%, 178 points in the red, 34,638. The high print on the futures in the Dow, 35,000, the high in the futures. The continuous contract, right now we hit a high of 34,946 yesterday, and just like that, we give up 300 points. We're trading at 34,644, down 172 points coming into the open. And the Russell leading the way in negative territory, down 0.75%. We're trading at 2183. You take a look at the Russell, you're talking about almost 200 points away from the all-time highs. I mean, the Russell making a run towards the lower end of its consolidation area that it's been in, basically going back to maybe January 25th. Those are the prices we're at right now in the Russell. Quite a difference when you look at Russell back to January 25th as of the NASDAQ 100. When you take a look at where you're talking about in the NASDAQ 100, even if you take the high of February, you're still talking about 1,100 points below where we're trading at right now in the NASDAQ, let alone the January 25th high, about 13,500. I mean, the run that the NASDAQ 100 has had, even just going back about 2 months, folks, you're going from 13,000 to 15,000. I'm ballparking, but there are 2,000 points that this thing ran, and that's about a 15% pop after a period of only about 2 months in those tech stocks. But as we all know, you got Microsoft, you have Apple, you got Amazon, all accelerating during those times, let alone even a company like Netflix. You pull up the chart of Netflix, where we were in May 13th, 481. Where we're going to be today, 556. Quite a run for Netflix shares. You jump into the 15-minute, as I talked about on the update at 9 o'clock. Netflix, they're going to be getting into gaming. Interesting to see how that shapes what they'll be doing. But Netflix, they hired a veteran of Facebook and EA to lead the gaming effort. They're going to add games to the streaming platform in the next year. It's coming as we speak, folks, marking its first big move beyond TV shows. It makes sense, too. I had seen that Microsoft trying to merge that gap as well in terms of smart TVs. There's no reason why, if you think about the past, a smart TV seems so normal these days. Remember when you used to have some type of Roku or device that turned your TV into that? Then they started selling TVs that had that device built into it. Going to be a similar deal. That's what Microsoft wants. They want to be able to basically put the Xbox technology right into your TV. That way you can play it. Netflix, they know what's coming in the future. They've done a good job of staying ahead of the curve. Remember when they originally started going into streaming? They split up their services between those who wanted actual CDs delivered, if you can remember that world we lived in, versus the streaming access that they were providing as well. The world kind of went a little crazy and a little revolt, but nonetheless, Netflix saw the writing on the wall, and I imagine gaming is going to be a part of that subscription service, and it's going to be something, folks, that you just patch into your TV, and you have the technology, and you can game right there. You probably plug a controller into the TV. That future is coming. It's a matter of when, not if, that comes, and Netflix jumping into there, so they get a little bit of a pop. You're talking about only $10, less than a 2% pop on the open for Netflix shares. Disney shares basically flat coming into their open, slightly in the red. Looks like this morning 183. They've had a nice little run recently from 170 to 186. The interesting thing there with Disney that past week was Black Widow, taking in about $80 million last weekend domestically, just shy of $80 million internationally, and then taking in $60 million just at home streaming. And folks, as a Disney lover in most ways, as in I'm a subscriber to the bundle over there. So Disney, Hulu, ESPN, I get the bundle in my home. I have Disney shares for myself in the newsletter as well. I've been a Disney bull, but I wasn't paying $30 for that movie on a streaming platform when most of the time that is going to be available to subscribers at some time in the future, right? It might be 3 or 4 months or however they decide to shape that rollout of those films, how long they keep them in theaters, when they push them out to their streaming platform. Wasn't imperative. I paid the $30, but man, it was revealing that they had 2 million households that are already Disney subscribers paying that $30 fee, which is pretty hefty. But they had a proof of model there that they can get it done, at least on an occasional basis. You got a Marvel brand, Black Widow. It's got a huge notoriety. They're not going to be able to do that with all the films, but it was pretty transformational in terms of the first time a company has been able to do that. And I know I'm a little biased. I'm a Disney bull, but that's part of being a Disney bull, is that they have brands that are unmatched, unparalleled, folks. I'm not sure they're going to be willing to put a lot of those brands into a streaming option. You think about, a big Star Wars blockbuster or something like that. I expect maybe they'll consider at least just pushing that into theaters once we're in a post-COVID reality that they can. But nonetheless, Disney hires well, Netflix hire as well. Let's just jump around to some of the FANG stocks this morning. We got Amazon shares up about $10 to $15 coming into the opening bell. We have Microsoft shares. They were up to $284.25 last night. Looks like they're going to be basically flat on the open this morning. Apple shares continuing the run. How about hitting 150 on the dot for Apple shares? And again, folks, I've brought it up. Apple's got 17 billion shares, approximately. I think it's 16.78 billion, something like that, outstanding shares overall. Folks, Apple has traded up almost $10 this week alone. They have added from where we were, that is last Thursday. So you're talking about 5 trading days, folks. Last Thursday, we're trading at 140. Today, you're up to 150. That's simple math. That's $170 billion in market capitalization Apple has added this week alone. The swings are just remarkable. The size of the company is just remarkable. Okay, let's jump over to the earnings that we got this morning so far. You get Morgan Stanley out with their numbers. They're down about $1. The banks have been struggling. Let's jump around to some of the other banks before we get into it. I mean, look at Bank of America, right? You pull back on their numbers as well. Wells Fargo, they were actually the contrary. Traded higher yesterday. You're backing off a bit. Citi, they were higher, but finished the day actually lower on yesterday's action. They're continuing a little bit lower. We had Goldman Sachs early in the week. They are lower as well. So Morgan Stanley, they're down about $1 coming into their numbers, and you pull up what they had to say. Morgan Stanley, I mean, it's interesting that all the headlines are earnings beat estimates, stock trading and investment banking, top expectations. Not always what you see and expect the stock to be lower, but nonetheless, that is the case, not quite living up to the expectations that traders had. Equities trading outperformed in the second quarter. How about $2.83 billion in revenue? More than $400 million over what the analysts expected. Like, though, rival Goldman Sachs, Morgan Stanley posted strong investment banking results, $2.38 billion. Market was looking for $2.1. They also exceeded in 2 other areas. I'm waiting for the but. It's in there somewhere. We'll check it out, and we'll get back into it. But the other 2 divisions exceeded, across the board. So let's see, massive wealth management business. They got an E-Trade acquisition last year, $6.1 billion in revenue. They beat the 5.9. Yeah, very strong quarter, as they put, but nonetheless, they're trading a little bit lower this morning from Morgan Stanley. Let's see how J.P. Morgan's trading as well. J.P. Morgan slightly lower as well. Stay tuned, folks. We come back, talk to Omar Keeman Hicks from Thinkorswim, TD Ameritrade Network, Fast Market. We'll be right back.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE. And you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We get the S&P is negative by 14 points. We got about 12 minutes to go until the opening bell, getting into the unemployment numbers in terms of initial claims that we got this morning. So the headline number that comes out, 360,000, new pandemic low is what we're talking about there. And that pretty much in line with expectations. You see it on the chart there, pandemic fresh low. Expectation, though, is about 350,000, continuing claims decreasing as well. All right, folks, let's jump over to our man, Kevin Hinks. Every trading day, 11 a.m. Eastern Time, live on Tiger TV and the TD Ameritrade Network, Fast Market. Kevin Hinks, Alex Coffey, and the team breaking down the market action, setting up hypothetical trades, folks, walking you through trade management. Kevin Hinks, good morning.
Good morning, Tommy. Happy Thursday. Lots going on in the market this morning, that's for sure.
Yeah, where do we start, Kevin? So we got initial jobless claims, not really a huge reading that the market looks for, but pretty much in line, continuing claims in there as well. But we got some manufacturing numbers in New York as well, with some pretty strong numbers out there, both coming out. Market kind of shakes them off a little bit. We have Chairman Powell, again, in front of Congress. What are you looking at this morning for the market action?
Yeah, the jobless claims number was solid at 360,000. The two regional data points we got, Philly Fed a big miss, but Empire State Manufacturing a big beat. I mean, 43, that is an incredible number out of there. Import-export prices kind of a non-event. So I think we're looking at, earnings, and as we get through now with the financials, we'll look to next week. I think you got really good news out of Netflix today. I think that's going to be an exciting turn of events as they start to get into video games, but I think this market is trying to figure out what a 1.3 10-year means to stocks. And as they're fleeing to what they trust the best, which is the FANG stocks and the NASDAQ. And that's why you see the NASDAQ hanging in there, even with the rest of the market under a little bit of pressure. But, this market isn't down big today. 160 points in the Dow is less than 0.5%. That's not going to scare anybody just yet. So I think this market is trying to figure out, is this the peak of what we're looking at here? The financials have put out good numbers, but some of their trading numbers with bonds were horrible. So I think overall we're trying to figure out where we are. Jerome Powell is certainly calming the markets with his talk of inflation. I just was talking with Oliver Rennick, and I said, Tommy, it's hard to play the long game like Jerome Powell is doing when the media, when the legislators, when everyone wants you to play the short game and they want you to overreact to short-term data. And for Jerome Powell to be sitting there day 2, now he's in front of the Senate and stay fast, stay firm on his beliefs, it's pretty amazing. He is the most impressive Fed chair in my professional career, Tommy.
It is remarkable, Kevin, that position, more so right now in the last year and a half, probably at least ever in my lifetime that I'm aware of, at least my professional lifetime where I'm aware of it. Talk about pressure in a situation and talk about having eyeballs on you and knowing. I imagine, like I have a pretty good impression of him, in terms of what he does. He seems like a brilliant man in that position. He's got to be aware of the decisions he makes and the implications they may have, and then the pressure you're going to have and the second guessing that's almost inevitable in that position that comes with it. It's pretty intense, especially when you put in light what they have going on right now in terms of the stimulus, the bond buying, et cetera, and the influence that's having on the market, man, in a big way. Jumping over to Netflix real quick, because you make a great point, man. I was talking about real briefly at the beginning of the show saying, Reed Hastings, man, he is a brilliant man as well and really got ahead of the curve when they jumped into streaming. I mean, we all remember it now, Kevin, but do you remember the whole internet flipping out when they split plans from streaming to actually dropping CDs off at your actual physical residence? And of course, he was way ahead of the whole universe on that. And I imagine gaming, it's not a matter of if, but when. We just plug remote controls into our TVs, man, and we're patched into gaming that's Xbox X, if not Xbox itself. Kind of surprised it's almost an $8 pop in that equity in terms of what may, be the future for that. It makes sense just fundamentally. Yeah,
but, let's see how this trades today, because remember, they have earnings coming out on July 20th. And so this is going to get interesting. This is a big announcement by Netflix. And a couple things. I want to see how Netflix trades. I want to see how some of its competitors, in video gaming trade. So it's going to be a two-way look at this market. But Netflix, I'm always, when brilliant people are running companies, my big curiosity is pipeline. What's in their pipeline? I think this morning Netflix just showed you what was in their pipeline.
Yeah, they got a couple big hires out there to really get into it. And as you said, they were. It's just remarkable, a company like that. There were so many people in that industry that could have done what they did in terms of building a streaming platform, first to market. What about Blockbuster Video? We all joke. But Reed Hastings, man, ahead of his time in a big way. Netflix up about $8 coming into that. So we have some earnings this morning, Kevin, as well. We got Morgan Stanley pretty much continuing the trend. Strong numbers like you talk about, but pulling back down about $1. The claims out as we talked about. What I was finding so interesting, Kevin, it's going to be really interesting when you get, because there's 3 numbers that they put out that I look at, just for the claims in terms of you got claims, you got continuing claims, and then you have the number of people on some type of government program benefit going on, which is still at 14.2 million. And that's through June 19th, I guess, super delayed there versus the other weekly numbers, but down about half a million, almost 449,000. That's going to be quite a fall off, man, once we get into September and the federal benefits start to fall off. It'd be interesting to see how that shakes out, people coming back to the market maybe, because I think they have in here as well, you're down about 2.7% in terms of the number of people in the employment market, 2.7% labor force participation down since February 2020. So we're coming into a pretty interesting time here, September. Those things fall off, how that hits the jobless market overall.
Yeah, this is going to be an interesting next couple months. And if I was one of these people that are out there, I wouldn't want to be the last one looking for a job. Right. I'd want to be the first one. So totally, I would expect some of those numbers to start moving a little earlier than the September cutoff. So, this next month or so, this next 60 to 90 days should be pretty interesting, Tommy.
It's a pretty interesting time to be alive, folks, to be in the market. We got markets near all-time highs, and we got a VIX right now, man. No matter what happens in this market, 1742, a little elevated with the S&Ps down about 14, but we're back to right that historical norm almost, Kevin, chopping around 1650 for the last basically week in the VIX. Well, what are we going to be talking about on the program coming up today, Kevin?
Interesting show today, Tommy. We're going to look at IBM in the first segment, and then we're going to look at a comparison between Walmart and Target in the next two segments. So we'll look at big box retail in the second half of the show.
I mean, Walmart, obviously an outstanding company, but Target, man, the run this thing has been on. I pull up Target, Kevin, and it seems like this thing is making new highs every single day. We're up to, and it almost is. I'm not even exaggerating. We're up to 253, and you were at, I think it was a pandemic low of 60. Well, close. No, not quite. Yeah, we were at $60 a couple years ago, but you were down at $90, folks. Kevin, man, we look forward to the show. We look forward to the education. We're not going to talk to you tomorrow, but you have a great weekend as well, and we'll be tuning in at 11 o'clock today.
Thanks for having me on, Tommy.
Thanks, Kevin. Take care, man. Folks, tune in every day. Outstanding program. Kevin Hinks, Alex Coffey, the entire team. They talk about Likefolio. They're talking about trends. They're talking about trade management. They're talking defined risk, folks, in this market. We're going to pull up some of those meme stocks, some of the Reddit stocks when we get back. You might want some defined risk in there as they are trading lower all this morning. Stay tuned, folks. We'll be coming right back.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps minus 11 points, catching a little bit of a bid on the open. We get the NASDAQ 100 up about 7 points. Same thing, up by a few points on the open. Dow catching a little bit of a bid, still off about 120 points. You got the Russell off about 11 points right now. Jumping around to other stories out there this morning. So interesting. This is out actually yesterday. Yeah, yesterday. But something I would really pay attention to, folks. BlackRock raising salaries 8% while the eyes inflation. Okay, so Larry Fink over there. Now, you know, this is not going to put or hurt on this company at all. You think about the amount of press this company is getting. This is a substantial amount of money. I'm not sure how much it is in terms of 8%. That is for every employee pay for directors and lower. They saw $81 billion in net inflows in the second quarter. I mean, business is booming right now for BlackRock and their CEO, Larry Fink. He's raising wages. The amount of press you're getting ahead of this right away, but it's nothing to shake off. And there you go. You have quite a little workforce right here. And I said a little workforce, but as in you have a company that just got an 8% pay bump, and that is not going away, period. That is going to contribute to higher prices as you have people with more money. The company saw its exchange-traded funds exceed $3 trillion. They have, $9.5 trillion under management at the end of June. I think they'll be okay. Nonetheless, you have them trading a little bit lower. But something to pay attention to because they are first to the party in terms of raising wages. They get some good press out there as a result of doing that. And I imagine they'll get a little bit ahead of the curve in terms of competing for human talent as well as BlackRock raising wages. Even if, here's where things get interesting because you could say even if there's not inflation, you have a competition for human talent going on right now in some of these companies that are performing so well. Well, that drives inflation, though, folks. Don't you see that? When they're competing and they have to raise wages by 8% to compete with even transitory inflation, that transitory inflation is going to be extended further because you have salaries getting increased that is not transitory, therefore causing inflationary pressures on the market and throughout. Something to consider. Either way, first to the party. Now, this was an interesting chart up here. So this is just a nighttime talking about what's happening in the market over at Bloomberg. But it was interesting when you think about the losing streak after the quarterly results that the banks have had. Now, this is going back to the end of 2019. All right, you got Bank of America in black, Citi in pink, JP Morgan in blue, Wells Fargo in yellow. They go quarter by quarter, and it's the one-day change in the share price after the quarterly results. That's a lot of negative action after their quarterly results, folks. I would keep it in mind. Really interesting when you look at Wells Fargo, the one outperforming over the last couple of quarters over there. They had been the dog for the longest time. As they come into earnings, they may be the one exceeding it after decreasing by dramatic numbers. But, man, you look at it, whether it's Bank of America, Citi, JP Morgan, or Wells Fargo, just missing in a big way as they come into the quarterly numbers on a consistent basis. Now, interest rates were just decimated. In terms of yields, decimated from most of 2020. They've rebounded in 2021, 2022, but something to keep in mind when you just see banks, whether it's next quarter as well, they've been on quite the negative trend. I imagine that may change at some point, but nonetheless disappointing on a quarterly basis, basically across the board for the banks. Even though they've rebounded, they have not rebounded on their earnings in any way. You jump around to the billion. So the headline here, this is quite a headline. Wall Street has surrendered to the $500 billion ETF rush. Vanguard leads the way as industry prepares to shatter annual record with months to go. Now look at this chart. You want to talk about crushing anything prior. First half of the year is in black. Second half of the year is in blue on this chart. It's talking about ETF inflows. Best first half of inflows on record by a dramatic amount, folks. You're talking about 449 billion is the number. 488.5 to be exact. The record for the entire year, 497. It is July 15th. We're going to crush that in a matter of probably days as the market rushes to ETFs. Almost all of the 25 largest asset managers in the U.S. offer an ETF or plan to do so. Capital Group is the biggest one without one, and it intends to join the club before long. Yeah, and then ETFs beat out mutual funds for inflows in recent years. I mean, look at ETFs and look at mutual funds, folks. You back it up to 2010, really the trend began. Quite a year in 2017, all right? And we're coming into 2021 at 447 in terms of inflows on ETFs. But again, we're only on July 15th. Quite the number when you look at that number in a big way. All right, what else we got going on? We got the market slipping into negative territory. Stocks pulling back. Look at the NASDAQ 100. We only opened for about 5.5 minutes. Quite the pullback indeed. You got the S&Ps pulling back a bit off 18 points. Dow actually catching a bid. A little bit of a reversal of the trend recently with tech stocks pulling back, the Dow catching a bid, Russell basically flat on the open. Let's jump around to some of the FANG stocks. We got Amazon. You're going to see it. Anytime the NASDAQ 100 pulls back, we got the big leaders pulling back. Amazon down about 0.5%. Microsoft shares down about 0.5%. Apple shares, after hitting 150 pre-market, you're down about 0.5%, just the same deal as well. Let's see how Netflix is trading. Giving it back. Netflix, on the news that they're getting into gaming, is back where you're trading at about 3 o'clock last night. Now, Netflix, you put it on the 3-year weekly. As I said, you're coming into the higher end of this consolidation. We'll see if we can break above that area. You're going back to a couple quarters ago on their earnings number. Now, if you pull up the daily going back 5 years, I'm going to get the full run in terms of where we were. Yes, that's 2019. Here's 2020. Okay, so COVID, we get down to about 297 on Netflix by about July. With many of the other tech stocks, Amazon did the same thing. By about July last year, we were trading at above 3,000 in Amazon. Netflix makes it to about 550 in July of last year. We actually eclipsed that level on their numbers in January of this year. Not much the case in April. They miss on their expectation in terms of subscribers. You pull back, but we're climbing right to the higher level of that. Be interesting to see if they come into their earnings number. They're talking about gaming. Be interesting to see what they're going to have to spend to get into gaming. One of the factors I'm sure the market will be looking for. But long term, probably a tremendous amount of growth that Netflix gets into. No reason why, as I said, you can't just plug a controller into your television and plug into gaming. Microsoft already trying to get, in terms of their Xbox basically built into televisions at some point in the future. It makes sense, folks. And let's just check out. As I said, Microsoft, we're down about 0.6%. Microsoft's been on a one-way. Whoops, that's Morgan Stanley. Down about 0.3%. Microsoft. All right, what else we got going on? Jumping around to some of the stocks that are moving. GM, not exactly what you want to hear if you're a Bolt EV owner. Don't park them inside or charge them unattended overnight, basically because they might light on fire. 2 vehicles caught up fire after they were repaired as part of a recall. So they already had a recall in here. Some owners of the 2017 to 2019 Bolt EVs, be careful out there if you have a car that falls into that category. And there was a recall of nearly 69,000 of them from 2017 to 2019. Now you have 2 vehicles that were already repaired as part of that recall, setting on fire. And GM shares this morning opened lower, catching a little bit of a bid up to about 57.50. The Dow only down about 99 now. Let's see how Boeing's trading. Boeing, quite a pullback yesterday, a little bit of a pop on the open, up to 224. You were down to 221 on the open. You put it back. That was right to this area. We were down in early May as well. Maybe we found a bid there. You're trading at 224 on Boeing shares. It's been all negative territory, though, recently for Boeing. And even if you pull up this trend line that we're in right now, you're talking about potentially off the bottom. You hit the bottom line of that trend line, you're still about 10% below where we're trading at right now. Stay tuned, folks. We come back right after the break.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets in negative territory, continuing the trend after the open with the S&Ps right near the lows of the session. We're down 17 points right now at 43.49. So jumping around too. Some of the not the FANG stocks, the meme stocks. Talk about a rebound. Maybe today's the day. AMC popping 5%. Not sure why. Doesn't matter why, folks. But man, this has been quite a slide. Interesting that you get back to really the gap it had from June 1st to June 2nd when it really popped to that 72.62. Basically closed that gap. We made a low in terms of today. You're talking about a low on the open of about 32.14. The high of that gap, 33.53. So you close it completely. AMC up about 5%. I mean, if you want to play some dice and gamble it up today, you can trade some AMC. Not sure where it's going to end up. But, man, I mean, I kid, of course, folks. But, man, you might be breaking that downtrend channel, but I don't know if we're there quite yet in terms of the highs, where they match up. Obviously, an art, not a science, but that might be a break. First time we've seen it in about a week as AMC trades from $50 down to $31. We're popping at 35. You got GameStop, I believe, jumping as well. Interesting to see how GameStop reacts, if that even matters with Netflix getting into gaming. Not sure GameStop trading on a fundamental nature of their stocks, but nonetheless, you were down to 155. You're up $12. You're flat on the session, but you were down about 10% overnight, down to 151 on GameStop shares. We'll see where that ends up. All right, what else we got happening in the market? We get United Health out with their numbers as well. Second quarter profit fall by more than a third from a year ago. Consumers resumed elective medical care that they had postponed due to the pandemic. However, they did beat estimates on the top and bottom lines, earning $470 versus $443. United Health, they are trading lower, down about 1.3% on their numbers. Taking a look at the context of where they've been, though, quite a run. From 187 at the lows of COVID, you came into COVID at 300. You're trading at almost 410 on their numbers this morning. All right, what else we got going on? Jumping around to some of the stories. So we talked about Morgan Stanley, unemployment. So getting into those numbers. So here's where the numbers stand out here. We got three different numbers as I talked to Kevin Hinks. So initial claims down 26,000 to 360,000. Market was looking for about 350 though, so could have been a little better. We still got 360,000 people within the last week filing an initial jobless claim. Not what you want to see out there. Now, the normal churn of a healthy economy is somewhere between 200 to 250,000 people on a weekly basis. Continuing claims, which run a week behind the headline number, also fell, not sure I would use the term sharply, but declining 126,000 to 3.24 million. I mean, in the context of where we are and how many people are underemployed, the number of job openings that are out there, a continuing claim decline by 126,000. Not sure I would use the term sharply, especially when you look at continuing claims on the chart. Not really a sharp, dramatic drop. Yes, the trend is in the right direction towards negative, towards lower continuing claims. But the interesting one that may shape how the economy marches on is those collecting benefits under all government programs also fell sharply. Maybe that's a more fair term when you're talking about, or a fairer term, I should say. Almost 500,000 people, 449,000 to 14.2 million, though. Now, this is a super lagging number compared to the others because this is as of June 19th. So continuing for the government lags behind continuing claims, which lag behind initial jobless claims out there. But that is the number that we had in terms of a year ago. 33.2 million people were on some form of government program. You're now at 14.2 million. As I mentioned, you're coming into September when the government extended unemployment. That program runs out in September. You're going to see that number, I imagine, drop dramatically because they're just not going to be able to be on a government program that does not exist come September. Many of the people on the 14.2 million that are on some form of government program that are not part of continuing claims are people who have exhausted their claims on a statewide basis, depending on what state you are. You only have a certain amount of months or whatever it is that's part of that unemployment program. They've exhausted the statewide claims. They have now jumped to the government programs available because of the stimulus passed by COVID, because of COVID, I should say. But that number's going to run out. It'll be interesting to see when you start seeing these people having to get off that roll. And Kevin put it sharply, folks. If you're out there, you're listening, you're thinking about it, man, you would be foolish to wait until those run out to start looking. Do yourself a favor, get ahead of the curve by a few months or a couple months, maybe even a few weeks before they fall off and everybody starts to plan accordingly. It's human nature to wait until the last minute, folks. Unfortunately, many of us do it. There's nothing like a deadline to get you motivated. Jump ahead of that deadline a little bit, though. And I imagine you're going to start to see that trend shape over the next couple of months. But quite a number, 14.2 million still receiving some form of government program, and that's going to be running out pretty soon. All right, let's jump around and see what we got happening in commodities. Bitcoin trading a little bit lower, 31,715. Whether it's a commodity, whether it's a currency, always like to look at Coinbase. They are struggling as well, down to about 229. Let's take a look at Tesla. They sometimes trade a little bit with crypto, and Tesla up about 1.5%, sitting at 663. Let's see how ARK is doing. Down to 118. Kathy Woods continuing to struggle with her fund. Down to 118. You're back to where we were basically in March, down from the highs of 159.70. The one thing I did agree with yesterday is she put out that she pulled out of basically her China technology companies, not believing that they had the future we all once thought as China clamps down on the technology companies over there. And let's take a look at how they're trading today. You got Diddy. Somebody's buying. Diddy's up 3.4% right now at 13.08. Now, here's what's so interesting, folks. I mean, you're almost back to where you were trading in terms of the open on June 30th. I mean, so much bad press has happened since this thing went public, folks. So much in terms of how you were valuing this company for the first 3 days it traded versus how you're valuing it now. I don't think a $2 haircut is a fair assessment in terms of how the landscape has changed for Diddy and all the companies over there. I'm sure you got Alibaba trading higher if Diddy's up by 3.4%, Alibaba up by about 1.9%. Now, I am an Uber bull. Uber has a position in Diddy. Let me just wipe these off. Move that one, move that one, move that one. Get a full context of where this has been. I'm an Uber bull. Uber has a position in Diddy. It would benefit them if Diddy shares traded higher, as they have a position. But folks, I'm just it doesn't even make sense actually how this stock is trading within anywhere near where it was trading before China came out and clamped down in a big way on all these technology stocks. All right, let's check it out. We'll continue with commodities. We got crude trading down 81 cents. Now, OPEC's got a deal over there. United Arab Emirates, they got their baseline number raised. They're going to come to a deal for extending those cuts. And crude reacting probably on that news from the last couple of days. You're down to 72.35. Still, all things considered, $73, $72 on crude. Quite a new number that we're used to in that market. And gold continuing to catch a bid. You put gold on the daily. We make a run in March. all the way up to the highs of about 1919 on June 1st. You pull back to a 618. You remain there basically from June 18th to June 30th. And since then, we've accelerated higher. You're up to 1827 from basically the lows of 1753 dating back to June 30th. And let's jump over to the VIX this morning as we get all the markets in the negative right now. VIX sitting at about 1708 this morning, pulling back as the markets catch a little bit of a bid right now. We get the S&Ps. Don't call it nothing, folks. We're about to make a high intraday, and we're a solid 8 points just in the last 5 minutes. The S&P is popping. Stay tuned, folks. We'll be right back to finish up the program.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps negative by 14 points right now. Let's jump around to some of the travel stocks. They've been pulling back this week, but rebounding for today. You're up 2.7% right now on Delta shares this morning. We'll jump around United shares, catching a small bump, you could call it, up about 0.1%. You got the market down about 0.3% though right now. So we covered Delta, United, American Airlines catching a bid as well, up about 1%. We'll jump to the cruise lines. Carnival continuing the slide to negative. Looks like cruise lines are going to take a beating for a while in this market as the market just not ready for cruises. The battle's on in Florida, of course. The governor not going to allow them to require vaccinations. I mean, I guess so, folks. I'm not going to be jumping on a cruise anytime soon with the rates that we have going on with children who can't get vaccinated. So you understand how they're taking a pain here in terms of kids still can't get vaccinated. You got outbreaks going on cruise ships. You got Florida numbers to the tune of potentially, 3, 4, 5,000 cases a day again. And that number, folks, is amplified by the fact that it's circulating among more so unvaccinated people. So it's a 5,000 number. But it's a big number. You got them trading lower. Airbnb sometimes trading with these stocks, but not quite the same in terms of travel-wise. Airbnb pulling back a little bit this week from 150 to 136. Airbnb, interesting to keep your eye on here. As I was taking a look at this equity, you pull back to the 618. We've now breached that. I had it, but you look where we are. This thing went IPO right at 140. So the battle is on here at 140. They held it on July 8th. They pulled back. Now you're below that level. And yeah, I think this is the full run, correct? So there's your entire run of IPOing in December. Actually breached that level barely, but you see we're bumping up against the lower boundary line, which does correlate to the IPO price of 140 for Airbnb, down from almost 220. But they're going to have some problems because they do a lot of business internationally, and you're going to be dealing potentially with some restrictions as that Delta variant spreads, especially talking about worldwide right now. All right, folks, thanks so much for starting your day with me. Stay tuned. We got our man Basil Chapman. He's in the saddle with the Tiger Technicians Hour coming up next. Then, of course, we got Fast Market at 11. They'll be talking Target. They'll be talking Walmart. They'll be talking some gaming stocks as well over there. And then we got, of course, Larry Pesavento coming up live at noon. Steve Rhodes at 1 o'clock. Dave White at 2 o'clock. Tom O'Brien, my dad, live from 3 till 4. Stay tuned, folks. Basil Chapman. He's up live next. Right back.